I made $13,000 in one trade, and this is how I did it. I know it's awkward, it's cringe as hell, everybody does it. But the reason I put that in the title and the reason I'm going to show you that is because I want to bring an element of authenticity or credibility. I was watching a video of Alex Hormozi and he simply said that you can get the same piece of advice from your economics professor, and you can also get the same piece of advice from Warren Buffett to invest in the S&P 500. But you would rather take that advice from Warren Buffett as opposed to your high school teacher, and not because of the information itself, rather because of the credibility of the source. You know, Warren Buffett, a seasoned veteran billionaire investor versus a high school teacher. So the reason I wanted to go through and in this video go through my metrics, show you my win rate and show you my performance, not just on one trade, because anybody can have a winning trade. And that's why I really hate these kind of videos of I made this in one trade or I can do this, is because it's very easy to get a win. You flip a coin enough times, you're gonna get heads. If you buy enough times, eventually you're gonna get a win. People want to see context, people want to see long-term performance, because anybody on a prop firm account can make these kind of returns in one trade. So now the key becomes performance and the key becomes profitability over time as opposed to one trade. So even though I've kind of reeled you in with that narrative of this is what I made in one trade, what I'm going to show you in this video is my performance over almost 300 trades, and it's not over short duration, it's over several weeks, probably a couple of months. And in that performance, I show you my win rate, I show you my average risk to reward, and I show you overall profitability with the dollar amount. So this will be a little bit of a longer video. It is a full case study. So take your time and enjoy this video. Watch it step by step. Don't rush through it. Don't have distractions on the side. Try and pay as much attention as possible to this video. Take as many notes as you can and maybe watch it 2 or 3 times to really find all of the nuggets that I'm mentioning. Hello ladies and gentlemen, welcome back to another video. If you're new here, then welcome to the WWA experience. And if you're a regular, you've been part of previous public webinars or fast track events or just been around in the WWA app, welcome back. Today I'm going to be covering today's price action on EU. You may have seen on today's stories, as you see every day, the positions that we take. I'd like to post them on my stories, and I like to post them in a very sequential way so you can see my exact entry. I take a screenshot with the timestamp at the top, exactly where the candle is, impossible to fake. You see my entry, and then you see when I break even, another screenshot when I'm break even, and then usually when I take a partial, so you can follow the trades with me every single day for the last month. And actually, let's jump into TradeZella real quick. So if you've been following on Instagram stories, you'll be seeing every single day the trades we're posting. So this is kind of the breakdown of that. So yeah, as you can see, it's a refreshed page, but you can kind of see my P&L over the last month from May 5th until today, June 21st. This is on all accounts that are connected. The win rates has not been the best over the last month, but nonetheless, you can see it's a nice equity curve. And my win rates is okay. My risk to reward, average risk to reward, I think TradeZella doesn't track it the best when it counts a break-even trade. It actually counts it as a loss. So that skews some of my data, but nonetheless, you can kind of see how I've been getting on. And especially if I show you, for example, today's trade log, for example. Yeah, if I come into today's trade that I want to break down for you today, let me just refresh this. There we go. So yeah, you can see my exact entry. So I've done the markup already, logged it into TradeZella. And you can actually see my time of entry and time of exit, and that's actually going to show you directly here. So upon this candle right here, it doesn't show you the exact line of where I entered, it shows you the candle. So I entered upon this candle, it was actually down here on the wick of that candle, and my exit ended up being at the high over here. It has gone a little bit further, but if you'll notice, I took a 30 lot trade and I did close all of it out. Usually I'd leave a runner, but I just wanted to close because it took high of previous day liquidity, so I wanted to cap it out here. But if I left it running, it'd probably be it'd be quite nice now. I closed it at a 1 to 10, but now it's running 1 to 15, so wonderful stuff. So let's actually look at how exactly I took that trade and what exactly I was seeing. So let's start off, fresh day. And where are we sitting in the market? We are sitting in a bearish market structure of this week, but you can see where we've come from. We've had a bullish push up, and now we're starting to get this retracement. And what this could be basically seen as is a form of complex pullback. For example, if I show you, we've had the bullish push out, and then we're getting this internal market structure, run of liquidity of that point, fueling the move lower. So that's something we'd be looking to seeing. You know, it's doing a complex pullback down. Okay, so that's kind of the higher time frame read. That's the only really thing, the bias can we have. We know that we're overall bullish, but we'd like to come and fill in this area, these large areas of imbalances, and maybe come down to these demand areas at least. That's what would be the initial assumption or initial directional bias. When we look at this wick over here, has it reacted off anything meaningful? Not really. Neither on the 1 hour, basically nothing, neither on the 4 hour or daily. So we can kind of see we are very, very bullish, but we're not coming off any levels specifically. So if this came lower during the week, it would not be surprising. And if it continues bullish from here, well, this is not a buy entry over here, but we can see why it would continue bullish, because we have these higher up supply zones that price could look to target. And this is just part of a bullish impulse. We're just having a small relief for a couple of days. Okay, so when I come into the day's price action, let me just put back on the WWA indicator. This is just to help with session timings and so forth. Okay, so what can we see? We can basically see, as I mentioned, that the previous day we had a run of liquidity. All of this area was liquidated with that spike, okay? And we actually took out this high also, so we can say that was actually a nice little inducement. Inducement of that high, whoops. Right there. Actually, it didn't, it respected. Okay, never mind. But you can see what it did. It came to that extreme level. It didn't actually run the liquidity. It came to the extreme, mitigated it. We had this area over here that we could say this was an inducement candle. Why? Because it ran that liquidity and then pushed lower. So perfect. And then prices come all the way to that extreme, respected and made a new low. So what can we say for immediate price action? We have very clear bearish market structure where we have low. Let's do it in red for bearish. Lower high, lower low, all the way to the extreme, lower high, all the way to the lower low. Okay, so we're in a bearish market structure, and therefore for this day's price action, what can be reasonable outcomes? Reasonable outcomes can basically be, we have now seen the area of the last lower high that made a lower low has been come to now. So we can start to say, are we going to get a follow through from here? Okay, because this is an area that is a decisional. The break of structure of this area over here, or even this area over here, a previous lower low has been taken out from this area over here. So we know that this is a decisional level, and therefore price is coming into this area and might come lower. Okay, but what we also need to be aware of, Asia high is usually a pool of liquidity, our first pool of liquidity. And because I'm not seeing anything significant within Asia to indicate to me that we are getting a change of character from here, I'm going to be more pensive and just wait to see what happens. And I'll be more looking to this area, which could be a bit more of interest. So I'll mark that out. Why am I marking that one out? Well, you know from the curriculums that it's not necessarily about where the break of structure came from. Usually that's our decisional or the extreme. Those are our main ones. But usually when we have a pool of liquidity very close to it, then we'll usually look for a smart money trap and therefore go for the supply zone right above. So this is something for me to monitor. Another thing for me to monitor is this area right over here. This is usually going to be a liquidity pool, and therefore I'm just going to be watching that area. I'm not actually going to say it's a run of liquidity just yet because it hasn't done anything, but it's an area I'm going to monitor. And then I'll say I'd like to look for buys potentially in this area. It's quite low, it's quite deep retracement, but I should be prepared if price comes over here. Let's put that as a demand. We know our supply is up here. Okay, so now we know where we're going. It can either come to the highest first and come lower and potentially follow this bearish trend because we've had that main push, complex pullback up and then continuation. That's one variation. Another one could be that price takes this liquidity, comes into this demand area and then pushes up to the supply, maybe reacts and then continues higher. We don't know, but we know that price is going to respect most likely one of these two zones and be manipulations in between. So likely to manipulate this point. Also, simply because there's a liquidity pool right there of Asia high. So these are the two areas I'm going to be watching. Okay, and I'm going to be seeing what daily cycle variants we can find. Okay, let's play some candles. I am on replay mode, but this is how I traded it today. As you can see, this was my actual trade of the day, but I don't want to ruin it. And you've also seen my MT4 screenshots on the stories, as always. Okay, let's give it a couple of candles. This is Frankfurt Open. What has Frankfurt Open done? Okay, well, this is actually beautiful because we're actually seeing exactly a daily cycle variant that we love to see, which is we have seen a equal lows. Let's actually jump onto M1. Equal lows. This is actually wonderful. FU candle, right? This is where people are going to be thinking, oh, smart money traders jumping in because we've taken those equal lows. We've had this FU candle. We're getting this small push up. Right, this is where people get very excited, and this is where manipulations happen. They're thinking, okay, price is leaving, price is taking off, and it's giving you these internal mitigations. This is encouraging smart money traders to get in. What does it do? Upon Frankfurt Open, manipulation time, and this is actually bang on 7 a.m. London, exactly Frankfurt Open, manipulation. Perfect. So smart money traders are already down for the day. So let's actually mark out that smart money trap. So this is actually going to add to our analysis. Sorry. This is actually going to add to our analysis because we need to see these manipulations. We need to see these runs of liquidities to build our story. Smart money trap. Okay, boom. Smart money traders taken out. And this is actually very perfect to see because it's actually bang on time. We usually like to see that upon a Frankfurt Open. And now we are looking to attack this low. As we expected, we wouldn't see this liquidity pool of Asia low and a smart money trap and this area just waiting. This area actually all became part of that smart money trap narrative. Why? Because it continued to show those lows. And then once again, that FU candle was part of the smart money trap. So you can see how the smart money trap trader really got fooled into it. Why? Because they saw this zone of FU candle, they saw equal lows, they saw an FU candle in, they saw that spike up, they got very excited, they're all laddering into this area. Frankfurt Open takes them all out. Okay, so that's a daily cycle variant, and we do need to see that. We need to see some form of manipulation and run of liquidity. Now all I'm going to be waiting for is price going to respect this area or is it going to come lower? So I'm actually pretty interested to see what is happening, especially as we approach London Open in 1 hour. Okay, so we're still grabbing that liquidity. We don't jump in. Now we can see a low has potentially been formed, but we're respecting that supply zone. So again, not interested. I'm going to continue forward. And now what are we seeing? Now we are interested. Why? Because we've seen a break of structure, a bullish break of structure after a manipulation, which is ideal. And now we are arriving with timing. We are arriving with London Open right around the corner. Okay, so what am I going to be doing? I'm going to be doing a marking out of my demand zone. Now I can be confident in this area. Why? Because it has already taken smart money traders out. It's already manipulated Asia low traders, and therefore we have grabbed sufficient amounts of liquidity and seen a bullish push out, a bullish impulse. So we could say that the FU candle smart money traders taken out, these support level traders taken out, and now we are seeing these counter trend line traders that were thinking bearish, they have just got taken out too with this spike higher. So now we're actually seeing a lot of manipulations, and now we are coming to our time window. London Open, we know that is a very strong time window to be trading, and we have our entry protocol. So I'm going to be looking to take an entry right here. Long position right here. Stop loss at the low. It gives me a nice 4 pip stop loss. I can actually go a little bit more aggressive. I can actually put my entry upon the exact protocol that we have, which would be, I don't want to give away too much for a public video, but it would actually be there. So let's actually see what happens. I'm actually going to leave the wider entry just for the sake of learning for now. Okay, we get tapped in. I want to be tapped in right now. Perfect. And then my break-even point will be when I've had that confirmation of that continuation. Okay. Okay, we're actually going to the deeper point exactly as I've mentioned. Right, it would be a 3 pip stop loss, but just for the sake of teaching, for being conservative, I'll keep it as a 4 pip stop loss. But originally I would have actually entered off that. If you know, you know. Okay, now we are seeing what? We are seeing London window perfect. And what are we seeing right here? We are seeing an internal break of structure. This is a perfect confirmation once again. Okay, this is showing to me that we're actually going to see that continuation with the London volume. We can see these mitigations over here, these wicks of rejection, plus the complete mitigation that we like to see. This trade is looking very strong to target where at least Asia high, and then probably going to target this liquidity point. So that's what I'm going to be doing as a liquidity target and a profit target, which is going to be right here at a minimum. But most likely, I want it to come to my supply zone. So what I'll do is I'll take a partial here and full volume at my supply zone. Or another partial, because actually we can say price could still continue higher to this extreme previous high of day liquidity. Previous day high, sorry. Okay, we are climbing. We are getting what? We are getting that bullish order flow, as we like to see. Okay, no worries. We're reacting off that supply, and boom, break even. Perfect. And now we are targeting Asia high. Perfect. Okay, what do we have here? Price is unfortunately taking me out for break even. If I did the entry that I prefer to do, this is why entry points are very, very crucial, because that wick would not have taken me out. But just for the sake of teaching, I did inflate my stop loss. But the true technical point is actually here. The laws of price action would actually be right there. And this has all become order flow liquidity. We get that run of liquidity, and now price is coming right back up. If this area is respected, it's going to switch bearish. If we break this area, it's going to go for Asia high liquidity. Okay, now we have got that confirmation, so we are going for Asia high liquidity. We have just grabbed that, and I'm actually looking for this point. And there we go. Okay, now I take my first partial. So my first partial would be here at just under a 1 to 6 risk to reward based on the proper entry. And now the rest will go to this this supply zone. Okay, perfect. That trade is complete. And now that's basically my London session done. Now all I need to do is be aware of my levels. This area right here is a demand area. Why? Because it took liquidity and led to a new high. It is actually a decisional point. Why? Because this area, this previous high, was taken out by this impulse. Who is responsible for taking that area out? It is these buyers were responsible for that bullish push, and therefore this becomes a demand area. So if price comes back over here, I want to see if there's going to be any lower time frame confirmations over here and any lower time frame confirmations here for me to sell. And that's kind of the two parts of price that I need to be watching. Okay, we've got an internal BOS relative to this point. Okay, so now I can actually look for a potential sell. Why? I've taken Asia high, I've taken a smart money trap, I've taken liquidity, and I've entered into a supply zone, and now I've added internal BOS. Potentially we could line up for a sell. The sell would be upon this area. Okay, price is already coming down. Okay, so that sell idea is now void because price has already basically come halfway to the target. Okay, this is interesting. Price is now confirming that we do have bearish pressure in the market. Why? Because we have that run of liquidity and we are probably going to continue lower. And as we do. Okay, so now we have confirmed that we have a high internal break of structure, fails to make a higher high, makes a higher low, goes on to make a lower low. We have established what? We have established an internal trend. Okay, so that was supposed to be my internal higher high, green, but then this actually went on to be bearish. This went on to fail to make a new higher high. So it should have been impulse, higher low, should have gone on to make a higher high, right? It should have gone to make a higher high, but it failed. It made a higher low, and that higher low went on to make a lower low. So what have we established? A bearish trend. Now I need to see what kind of reaction we'll have upon this area. I'll actually extend it to the M5 zone. And I want to see if this area is going to give me lower time frame confirmations to buy to clear this supply zone. But I need to see strong confirmations. I can't just randomly jump in. Okay, nothing for now. Okay, now we've established something. Okay, so this area came into a supply point. Okay, and it should have made a low. That's what it should have done. But it failed to make a low. Okay, and actually went on to make an internal high. So what have we seen? We have seen that change in nature. We have seen an area that pushed out. It failed to make a lower low and went on to make an internal high. So now I can look to this area. Excuse me. I can look to that area for potential buys, respecting off what? Respecting off this FU candle inducement zone that led to a higher high. So let's see if it actually comes back and gives me anything. Okay, now we are actually seeing that it's not worth getting in now because we are seeing this. Excuse me, sorry. We are seeing prices now coming to the M5 zone. Yeah, it's not worth taking a trade anymore. Because price is coming into that supply zone, it's closing that imbalance, it's tapped into supply, and look how it has tapped into supply. There we go. How is it tapped into supply? It's done a run of liquidity inducement. So this is now no longer favorable for buys. These buys that I was looking for, no longer valid because we are respecting bearish order flow. That supply zone, that took liquidity. We are now coming back into that with a bit more manipulation. It looks like sellers are still in control. So I'm not going to buy here. This is giving me a smart money reaction. This is probably going to be a form of manipulation. Either way, I'm not interested. Even if it plays, I'm not interested. But I think that was more likely to be a trap. Okay, look at that. It's showing you lows equal lows. It's showing you reasons to get in, double bottom, triple bottom, and taken out. Okay, that is what you call a manipulation. So that's why I'm not too interested in this area. Lows, let's do that in purple. So once we've seen that manipulation, we need to be realizing that this is not this is now in between legs, but this is something we can be interested in. Okay, this is still a demand area, and now we've seen that manipulation. If we get that internal BOS, I can look to buy. No internal BOS yet. Okay, now we are getting something. Now we are seeing equal highs printed. So now I can look to buy potentially upon this area. I'll just cover that point, that wick. And I'll look to target at least this area. Why? Because we had a previous bullish impulse. Higher low, higher high, complex pullback. And now I want to target this area at least and make a new high high. So that's something I'm looking for. Okay, let's say that tapped in. Okay, my break-even protocol is when I breach this area. So I'm now going to be break-even. Okay, realistically, that would have taken me out for break-even. My break-even point would have been here. So I tapped in, grabbed a little bit more liquidity, and that just takes me out for break-even. That's fine. I'm not looking to jump into aggressively, but we can actually read price action. It's done a manipulation, and then why has it done that manipulation? Because we have New York Open. New York Open is usually aligned with a bit of manipulation. That's fine. I just want to see now what happens next, but I'm no longer in that buy position because I would have been taken out for my break-even protocol. Okay, let's see what's happening next. Okay, and now we have seen prices just basically respecting that supply zone. And how has it done it? It's grabbed a little bit more liquidity. Okay, and that is confirming to me that this was a smart money trap zone, this fake FU candle. So we can see how price is actually littered with these smart money traps these days. And now we have seen that lower low continuation. Well, let's actually see where the low is. Okay, that was the low, but it's actually still fluctuating around. So let me just see how price reacts off that area. But we can see how price is still remaining bearish. There is no change in momentum. There's no change in anything. This is just simply bearish order flow. Supply, there we go. Okay, so what I'm going to be looking now for is this whole area to be taken out. Okay, I want this area to be liquidated and maybe even coming down to this demand area. That's the thoughts I'll be having. Why? Because I've just had this manipulation into supply. But I am also approaching a key window for me. So I want to be seeing what is kind of the next move. But I don't want to be playing this demand area anymore. I want to see a little bit more liquidity grab. And that's kind of what I'm going to be waiting for. Some form of run of liquidity. And there we have it. We've run the liquidity of that point. So now we can confirm this is a inducement low. Okay, now we've had that inducement low. What do we see? We need to see when the low is finished. When are we completing that inducement? That could just be in this random area, or it could come all the way down to demand. So we don't know when is enough liquidity, and it's not our job to know. We just need to see when it's done grabbing liquidity, and we'll see that through changes of character. We'll see that through bullish impulses, bullish imbalances, bullish breaks of structure and things like that. So that's what we're going to wait for. Okay, nothing yet. People could be very keen to jump in here, but that's not proper trading. This is premature trading because we've had no break of structure. We've had no reason to enter. Okay, this is the last high. This is the low. So this needs to be breached before we even consider anything. Or we need to have internal structure that we are building now. Okay, wait. Still nothing. Okay, now we have that confirmation. Look, now we have, just with a bit of patience, you don't jump in. You just wait for that break of structure. And now we can see that liquidity grab allowed us to have a break of structure where price previously was capped here. Okay, and that previous cap was now breached. We had this low, and this area led to that low. Price could not previously break this area. This was actually a run of liquidity to allow price to come lower. We grabbed all of this liquidity now, more fuel from this area, all of these stop losses in this area, grab that liquidity, and then the reaction. That reaction showed us that that run of liquidity was successful because it allowed a break of structure. And now we are coming into our key time window. So this is aligning to be a perfect trade. This is perfect daily cycle. This is a prime setup. Sorry, wrong one. I need to put that as demand. Okay, and that's where I'm going to be looking to trade. So I'm actually going to be putting a limit, a buy limit, right here. Stop loss at the low, 4 pip stop loss just above. And that's what the New York trade is looking to be. If I get manipulations of this point over here and deeper into supply, I could potentially look to sell down into that buy area. So let's actually see if we do get that. Okay, New York window. We are just respecting that internal break of structure. Okay, interesting. So what are we seeing? We are seeing right now sellers are in control because we have that area, run of liquidity taps into the supply. So it's showing us that the bearish momentum right now has just come back. Okay, and what is their intention? Their intention is to at least come here. And what are we reading this all as? Order flow liquidity. Look at all of that liquidity being made. Perfect to be taken out once we tap into our demand area. Text. Complex pullback liquidity. Perfect. So once we tap into that demand, this area all becomes a liquidity target to be taken out. So that's kind of the trade idea we are building. Okay, don't get too keen to enter. This is where people would go wrong. We just have to wait for the imbalance. Okay, now we are tapped in. That's where we take our entry with the limit. Perfect. We are tapped into the trade. Break even point is here. That's our break even point. And now let's see. Okay, we won't break even yet. Tapping in one more time. What has it done? It's done a minor inducement. Right there. It's just wanted to grab a teeny bit more liquidity. And now it's good to go, hopefully. Break even. And internal high made. Now we are grabbing all of this liquidity. So now this trade should go to where? High of previous day. That's where it should go. Why? Because we are following market structure. What are we following? This area complex pullback. Okay. Grabs a bit of liquidity. Makes a push out. Complex pullback. Taps into the extreme. It should now continue higher. So we could be looking to challenging this area. That's what we should be basically looking for. And therefore that will be my target. And then that's where we can be reasonably assuming to take some profit. And then where will we ultimately want to target? High of previous week. That will be the eventual target. The high of previous week. But that is going to be a shift in trend. So this is not something we can anticipate, but it's something we're going to monitor and see what is the most favorable and likely scenario to happen. But we can see when a good trade happens, when a prime trade happens, it doesn't hang around. It taps and goes. And within 5, 6, 7 minutes, we're up 1 to 6 or about 1 to 6. So let's see where this takes us. Look how it didn't react on anything. No reaction, nothing. Just a couple of odd candles, but nothing really, because we are expecting that higher high to be taken out. Higher high, higher low, higher high. Bullish market structure. And we are coming directly to high of previous day where we're going to take a partial. Okay, at 1 to 8 restored, we are taking a partial right here. And that is us done, basically, for the session. And now we just leave a runner to see what is going to happen next. Okay, London close is happening. And basically done for the day. Okay, perfect. So now we can kind of log off the charts and basically keep an eye on for our next our next profit target, which should be high of previous week. It's climbing, and perfect. Pretty much perfect. So partials taken at high of previous day. We took a 1 to 8 some partials, and now 1 to 14. We can basically close out the whole position and call it a day. New York session basically coming to a close. And that is what you call a perfect day. And we can see now, as I'm recording, where it's headed. 1 to 18 restored, okay? So that is what you call a perfect daily cycle variance, perfect liquidity movements, perfect with market structure. Yeah, just very, very clean trade. And as you can see from my TradeZella, that's exactly what I did. I don't know why it shows it on the candle, but I actually entered over here, as you can see, well, as I showed you, and then exit over here at high of previous day. You can actually see the exact price point of the exit was, where is it? 1.0957. Sorry, entry was 1.09121, 1.09121 exactly. So you can see over here, 1.09121, that was my actual entry, not the arrow. That's where I executed the trade, and I had 30 lots running on it, so very, very nice. And that was my day. And you can actually see it was actually a pretty good day for me, considering, because I actually held most of the volume, whereas previously I would look to partial a little bit more aggressively. To take things very seriously, you can't be entering on 1-2 confirmations. Rather, you need to have a series of confirmations. That was the first thing I wanted you to notice. The second thing that I wanted you to pay attention to was how I would play the devil's advocate and how I'd use that to have an invalidation criteria. If you remember in the video, I mentioned I was looking for a buy in a certain zone, and then as price came into the supply zone and did an inducement into that supply zone, I said, now these buys are no longer valid. And then I said, absolute no. And then as price came down again to that demand area and then gave lower time frame confirmations in a different way, it re-justified me entering that trade. So you can see it's not just about having confirmations, it's about having your confirmations and being dynamic with it in terms of a checklist. And that's how you move with live price action. And then the last thing I want you to pay attention to in this video was the smart money traps. And if you could pay attention, there was actually quite a few smart money traps littered around. It's quite important to realize that that is now another form of liquidity pool, and therefore you're going to have more manipulations targeting that, and therefore you don't want to be on the losing side. Rather, you want to be aware of where those smart money traps are so you do not fall victim to those losses. So those were my tips from this video. But there was a video I made a couple of days ago which is talking about the 5 tips that every trader should have. And I'm not talking about the generic tips of, risk management and blah, blah, blah. I'm talking about things that you probably never thought of and never heard of. And those were tips that I wish I knew when I first started out trading. When I wanted to become a full-time trader, I had 5 goals, and these 5 goals I wish I knew sooner. And especially 3 of them, I guarantee you've never even considered. So go and check that video out, because I think it's important to follow on from this video to take heed of the tips in those videos also. So I'll see you there.